As Richard just mentioned, I have the fortunate task of taking a 200-year-old company and looking at ways of how we transform that company and to be relevant for the customers of the future and for the banks of tomorrow. A little bit about me. I have always had a lifelong passion around the role that payments plays in our society and on emerging markets as well as developed markets. My passion for this has come from believing that at the core of every society, it's about a payment. It's about how money exchanges between family members, between a business and a customer. It's about how money changes the way in which we think about the world and the way that we interact with it. And over the last number of years, I've traveled the world looking at how payments have played a role in the communities in some societies that we don't talk much of. So I thought what I would do first is tell you a little bit about my fintech story. So over a decade ago, I had the opportunity of traveling to Africa, and I got a tour of Finley's tea plantation. And through this tour, I got to meet the 6,000 employees of the plantation, met with the medical facilities, the child care facilities, met with the entire community and the resources that made Finley Tea Plantation work. And what I became fascinated by was the way that money was moving. Many of you know about M-Pesa. This was over a decade ago. And at the time, all 6,000 employees were getting paid with mobile money. And it was the first time I had witnessed a society where without cash exchange, it was vibrant and it was successful and it was incredibly a representation of what the possibility could be. Fast forward to where we are today. And this whole notion of mobile money is happening around the world. And it's not just in Africa. You're seeing transformation in India, Pakistan, Ethiopia, and even here in UAE. When I think about mobile money, I also think about the constant change. The one thing that we all know is that is constant is absolutely change. The thing that we're going through at Citi is that big banks and fintech providers and entrepreneurs have to come together and become unified in order to make our society different. I think there's been a lot of stipulation in the media around if you're a big bank, you're going to fail. If you're fintech, you're going to eat their lunch. And I'm sure over the course of the next 2 days, we're going to hear a bit about both sides of the equation. The reality is that if we want to make this a reality, we absolutely need to come together to unify. And when I think about the democratization of financial services, there are 7.5 billion people in this world. Each of us, each of you, money is at the core. There's 1.5 billion that don't have access to money and are the unbanked. Technology is ensuring that we can bring them into the ecosystem and we can make them part of where we're at. A few statistics. Investment in fintech, particularly in the US, but I'm going to show you a global depiction of this, is the growth of fintech has been pretty astronomical. In 2015, we saw a double of that growth, and there was over $12 billion in investments that were made within fintech. In 2016, we saw a tremendous amount of growth as well. The area within each of the financial services sector that is being invested is payments. Again, it is the catalyst for what's driving the change in the financial services industry. As you can see, there's been a 10% increase from the previous year. And while we've seen a slight downturn in 2016, it's only because we've started to see saturation in the market. There are a tremendous amount of money movement providers all around the world, whether you're facilitating cross-border payments or whether you're facilitating domestic payments. At some point in time, you're going to start to see the growth of some of them usurp the smaller ones that are starting to come to the market. But the growth has been absolutely tremendous. And banks are feeling the pressure. As I said earlier, I think there's this idea that the big banks don't have a sense of what's happening into the market. I'm going to take this down to be pragmatic about what we're doing at Citi about it and how we do recognize what's happening in the industry, what our customers need, how we have to change. The fact of the matter is that we haven't been able to do that given the 200 years of technology debt that we have, and candidly a culture that was not a supporter or wasn't enabled to give way into new innovations that are happening around the world. A couple of stats that I thought I would share with you. 88% of the incumbents are increasingly concerned about the fintech providers and some of you actually taking a piece of their business. 77% of the financial institutions see increase in their internal efforts to innovate. Now, there was a PwC study that was just done, and it said even though 77% of the incumbents see a need to drive change and to embrace that, the reality is that less than 50% of them actually know how to do it. 82% of the incumbents seek to explore fintech partnerships to boost innovation. There is a tremendous threat on our existing business models. And I think there's a reality, and I have experienced this the last 18 months, that the large institutions know that if you don't change, you will become irrelevant. And it's happening all around the world. In some of these key regions and markets, you're seeing tremendous amount of investment. Employees that are moving into the fintech sector away from the traditional environment. Here, in the Middle East, you're embracing for a fintech boom. There's been over $100 million that have been invested in fintech providers over the last year. But the reality is it's just the beginning. You start to see the trends of what's happening in other areas of the market, and you recognize that you're just beginning. As we start to see more capital flow into not just this region here, but around the world, we're going to start to see the world change. I've often said that when money changes, the world changes. And if you think about the one thing that touches each of us, money and our identity, when those things start to transform, you can't help but to acknowledge where the world is headed. And the global forces that are driving change. As a speaker at these events, I hesitate sometimes putting up the global forces and the macro trends, because everybody who's here recognizes that there's something bigger that is happening that is getting us to the place that we are, whether we're trying to solve for it or whether we're trying to capitalize on it. But there's no doubt that there's some major trends that are happening across the world that have gotten us to the place that we are today. Some of them you see on the slides, but there's two I wanted to touch a little bit more briefly on. So smartphone ownership. We all know that smartphones adoption has accelerated at a tremendous pace. What I find fascinating, and I again kind of bring you back to my Africa example, is that 93% of those in Africa own a smartphone. But yet there's less than half of them that have access to clean water. And there's only 60% of them that have access or that live on paved roads. And so you start to think about the opportunity for technology and for mobile devices to basically usurp and to jump forward to the next generation of financial services. For people who can't even live with clean water, now have a phone and can transfer money. Government involvement has also been fascinating when you start to look at what's happening around the globe. And I'll say more so in Asia and in the UK. The government involvement has accelerated the pace of which the countries as well as the individuals in those countries have adopted this change. The governments in Singapore, as many of you may have read, have actually adopted the idea of creating a sandbox environment so that fintech providers can play and can experiment and can innovate with some of the big players out there and do it safely without putting the business at risk or customers' data at risk. Unfortunately, in the US, we haven't seen that much involvement from the government. They've actually decided to take more of a back seat. But yet, when you look at the role that a government can play in accelerating the change, it's pretty tremendous. In India specifically, for those that aren't familiar with Aadhaar, they've effectively implemented and deployed a government ID system. That government ID system has now been embraced by over 95% of the people who live there. And what that has done accelerated what payments looks like and how it moves across mobile devices and how they've accelerated a digital, non-cash-based society. So customer expectations are changing, internet reach, software growth. I think Mark Andreessen said, an investor from the US, that software is eating the world. I think most of us can absolutely identify that, particularly when you walk around the halls outside today. And as I mentioned, payments are a catalyst. Where did we start? But there's a tremendous amount of opportunity left. I spent about 15 minutes walking around the center today, and there was a lot in the B2B space, the software place, the enterprise space, the payment space. But what you're seeing in more of the development markets who have had more investment, there's a lot in lending, there's a lot in wealth management, there's a lot in identity management, there's a lot in how you protect customers' data. And so for those of you who haven't embraced this first wave of payments, just imagine kind of what's on the horizon for the second and the third wave. And again, a little bit about the growth projection. This is something, a payment has absolutely dissolved the barriers between cultures and between markets and between the way that people interact. I was fortunate to do a TED Talk a couple years back, and one of the things that we talked about is that with the ability to manage risk and to understand the intentions of what a customer is trying to do, what they're trying to buy, what they're trying to serve, who they're trying to interact with, you can absolutely open up the world to participate in this global economy in all corners of it. And it's something that's become reality today. Payment will become invisible. So we're quickly getting to a place where money and a payment is so invisible and so seamless and so intuitive and so trusted that it's becoming an event behind the scenes of an emotional transaction. I think thanks to fintech and global innovation, we are seeing something happen for what I would say the second time in human history. If you go all the way back to 6000 BC, you start to recognize that the exchange of value in money was not about a cash or coin. It was about trust between two individuals. It was a handshake, a commitment. The barter system then started to evolve in how we think about payment. And now what you're seeing is that money is disappearing. And it becomes more about that event that happens, that's facilitated by a payment. The old ways are giving away and are dissolving into the new ways of money. And I do believe that while technology has enabled us to have money become invisible, that the emotional aspect of our lives are coming to the forefront. And we'll talk a little bit about that. So here's why we're here, is that the fintech disruptors have taken single use cases and have taken the old banking model and have started to unbundle it, solving for bits and pieces of what that entire financial services equation looks like, from real estate investment to insurance, to wealth management, to point of sale, to accounting and bookkeeping. Like, there is no sector in the financial services that has been untouched. At varying degrees, yes. Varying disruption with varying success, but they're all being touched. Each of these areas is where fintech is being challenged and is how we start to think about money differently. This rebundling has happened over the last 2 years. And what I find fascinating about the pace of change is in just a year, in the last year, you're starting to hear about a rebundling. And I tend to liken this when I speak in the US about the media sector, or about the news sector, or about the music sector. So you remember those days, I'm aging myself a little bit, but when there was a record, and you buy the record and it has 10 to 12 songs. And then Apple came into the mix and many others, and you started to see the disintermediation and the innovation around buying music, where now you can buy one song, you can test a song. And now you're starting to see that rebundling and the rebundling of your favorite music in your iPad, in your iPhone, in your iPod. The same thing is happening with banking. And what you're seeing is the rebundling is starting the unbundling is rebundling. The question becomes is who ends up winning? I don't necessarily think it's a bank, but some of these fintech providers that are out there, they're starting with wealth management. And their customers are driving them to think about beyond wealth management, to think about holding balance, to think about issuing a credit card, to think about underwriting. And so each one of these are starting to look a little bit different than where they started. And that brings me to a couple things around what our shared challenges are between the incumbents and the fintech providers. Identity, trust, scale, and the regulatory environment play quite an active role. These are each causing us to unite in very different ways. So let's take scale, for instance. A number of the fintech providers are having trouble gaining capital infusion, growing globally, getting customers at scale. It's a bit different when you're a 200-year-old company and you've got hundreds of thousands of customers that you can tap into versus when you're a startup. Building a customer brand is very, very difficult to do. So scale's very different, and yet the incumbents, those of us within the banks, realize that scaling, even though you have a cloud-based infrastructure, and even though you've got a tremendous amount of employee base and knowledge that you can take advantage of, that scaling with the customer needs is very, very difficult. So how do you innovate? And we'll talk a little bit about that. The regulatory environment, we discussed this a little bit. At least I can speak from the US, again, it's different around the world. But the fact of the matter is the regulatory environment puts a lot more scrutiny on what it is to govern a financial institution than what it is to govern a fintech that sits outside of a traditional bank. Capital structures are different. How they regulate information is different, how they can transact is different, but all that is starting to converge in ways that are going to drive those fintech providers to also understand the importance and the scrutiny of what it's like to be in a regulated field. Again, an opportunity for us to converge versus diverge to solve what I believe is what the customers will benefit from. And identity management, this is something near and dear to my heart. It probably deserves a speech all in of itself. But when you look at a payment, at the core of that is who somebody is. So how do you keep the bad guys out and the good guys in? How do you figure out when you've got the sophistication around the hacker environment, sophistication around what's happening, even look at Swift, some of the announcements that have happened with Swift over the last couple of weeks. The fact of the matter is no one is excluded from a potential breach. And so understanding who those people are, who those institutions are, those enterprises are, and ensuring with high degree of certainty that who they are is and what they're doing is enabling that money movement is absolutely key. And trust, I'll touch briefly on trust. So there's this belief that the big banks and large institutions no longer hold the trust of the customers that they serve. Statistically, when you look at someone entrusting their financial health and wealth and their livelihood, they still trust the big brands that have been around for hundreds of years. While they're willing to dabble with secondary accounts and some of the fintech providers, at the end of the day, when they look at migrating all their wealth into one entity, it tends to be the wealth management or the banks, not necessarily some of the small startups. So again, I come from the startup field, I come from technology. There's a massive role for them to play in our society and changing, but the reality is that it's the combination that's gonna make it work. So just a few minutes that I wanted to touch on of what we've done at Citi to kind of bring this home and to kind of lend everybody's ear to the fact that big companies can drive big change and the outcomes can be tremendous. So Stephen Bird, who's our global banking CEO, created what he called Citi Fintech, something that I have been a part of for the last 18 months. And the whole intent in our mandate was, how do you enable the business to become more agile? How do you discover new solutions to service our global customers? And how do you create disruptive business models to look at the new vectors of growth? Within each one of these dimensions, we were asked to look at partners on the outside with this huge recognition that we can't build it ourselves. We have fallen behind, and much like some of the large institutions, in order for us to play catch up, it's not going to pretend that we're gonna be able to do it on our own. It's about doing it with the fintech providers out there and many of those that are out there in the hall. And in doing so, we adopted what an agile methodology is, we started to look at what design thinking is, and we started to change the culture. And these three dimensions are aspects of what have been core to allowing us to achieve what we did in the last 18 months, and I'll end up giving you some specifics. So the agile methodology, how do you move fast? How do you do that in an environment where you're highly regulated? How do you bring the government and your controls functions along so it's not a 9-month, 5-month endeavor in order for you to get to the place where you need to be with launching new products into the environment? I'll give you an example. So about 24 months, we conceived an idea that we wanted to launch into our new mobile app. And it was a great idea. I mean, it was something that I think that our customers would have adopted. The reality is the world caught up with us, and by the time that we launched it, it was no longer relevant. And so it's not only about learning to build and to innovate quickly, it's about learning to do it cheaply. Those types of investments, whether it's 10 million, $1 billion, I mean, we've all made on the enterprise scale, those types of level investments, you can't do it anymore. So what if you can spend 20,000, 50,000, 100,000 and fail quickly and fail cheaply is the way it needs to go. And we started with payments too. So a little bit about where we started. In 2016, we knew that, as I mentioned, in order to move quickly or at the pace of fintech, we had to partner with the fintechs. But to do that, one of the biggest barriers for us is it's hard to do business. It was hard to do business with Citi. We found a lot of these startup companies that wanted to integrate with us, wanted to find different ways in which they can have access and tap into our customer base. And the reality is that it was really hard to do. So we started on our own agenda of looking at the open banking initiative, which is effectively saying, how open do we as an institution want to be? What are we willing to give our partners access to? What are we willing to allow them to innovate on top of what we have to offer? And in doing that, it allowed us to get to a pay with points agenda, where we can effectively allow our customers to buy on other properties. And as I said, we had to rethink openness. So this will share you a little bit about, we launched the Developer Hub back in November of last year. We had a tremendous amount of interest with the signups. We had to rethink who our customer is and what our customers wanted. So one of the things that we launched, and I know time's up, so we'll wrap here, but is we had to relook at what our customer needs are. And we did this by talking to 2,500 of them every 2 weeks, testing ideas with them, understanding what is it that they wanted from Citi. And in doing so, we knew that they were interested in having a wealth management offering, something that Citibank actually decided not to play a part in a few years back. And so in doing that, we found different ways in which we wanted to open up an investment account, onboard a new customer. Onboarding is something that I'll talk a little bit about. Is at the bank, we effectively required our customers to sign and to read 15 pages of information, to fill out 66 fields in order to actually open up a brokerage account. The fintechs out there, what they were doing is they were doing it in a couple clicks and they were pre-popping the fields. It's a beautiful experience. And so what we did is we challenged ourselves to say, how could we do it differently? Still being regulated, but do it in a way where we could increase the rate in which our customers could get through the funnel. And then lastly, we're going to talk a little bit here as we're wrapping up, is the opportunity for us to think about what banking could be and how we could be at that center of the rebundling equation allowed us to create different modules and different APIs, whether it's P2P or wealth management or identity or KYC. How do you rethink AML? All of these are aspects of what it means to reinvent the financial services sector. And in doing so, we started to think a lot more about the money equation. So in closing, our belief, my belief, is that a payment that used to be filled with friction and used to be filled with data and used to be filled with risk has become so seamless that now what you think about is, how do you automate it? How does it happen behind the scenes? What's the emotional element of it? How do you know when someone's state of mind is receptive to what they want to do with their money and how you can guide them? And so we believe that at the core of this is identity management, emotional detection, autonomous funding instrument selection, and frictionless transactions. So I think over the course of the next couple of days, you're going to hear a tremendous amount about technology and about the world that we're embarking upon. What I would ask all of you is that technology is fascinating, but think about the customer that is in mind, and think about that customer who's the jet-lagged business traveler, the family member, the employer, the buyer, the seller, and think about what is it that you need to provide them. And in doing so, I think the technology will allow us to get there. So thank you. It's a pleasure to be here.